Hello and welcome to yet another episode of Digital Success Dialogue. We have with us today Mr. Manoj Garg, partner at Value U and managing partner at Simply Invest. He will be joined in a conversation by Ankan Das, head of marketing at IndusNet Technologies. Together, they will be discussing the new financial investments that will drive fintech in the next decade in India. If you have any questions, please put it in the comment box below you. Over to you, Ankan. But before that, we'll present a short video.
Hello, Manoj. Hello, Manoj. Good evening. How are you?
Good evening. Very good evening. Perfectly okay.
Yeah.
Enjoying
Hi,
the
guys. Yeah, please.
no, just we all are everybody enjoying the blues of lockdown.
True. So, guys, today we are joined by Manoj Garg. He has one of the leading pioneer in this field of insurance and banking. He has been in this field for the last 25 years. We are looking forward to a very insightful session today. Thank you, Manoj, for joining us. It is a pleasure having you with us. So, without further ado, let's get started. I'm very keen to know firsthand your experience, and from there we can get started on discussing some questions.
Surely. Like nowadays, I'm into the semi-retirement mode, you can say, because started my journey long back. It has been 24 years. So I have been on the both side of the table, like on the distribution side, on the manufacturer. Now I'm on the other side, like doing my own business. So the basic passion was always about the finance sector and moreover mutual fund per se in financial sector. So and I was very fortunate enough to get a very good position in started my corporate career in ICICI Bank as a zonal head for the entire East. I was driving three products like mutual funds, general insurance, and life insurance. And after that, right from ICICI Bank, a very aggressive bank, to all of a sudden to an IDBI Bank, nationalized bank. So again, the same position because due to my passion only, I was the zonal head for entire Eastern India. And as I told you, like my passion was mutual fund. So when I got a call from Tata Mutual Fund, so I took no time. Many of my colleagues, family and friends told कि this is a PSU bank, government bank, Sarkari Chakri. But somehow the lure or the passion of mutual fund was more than Sarkari Chakri or the pension
Right.
thing. So
Right.
joined Tata Mutual Fund, and now, as I told you, I am into this mutual fund, basically in the training division. So training
Right.
people,
Right.
yeah.
Right. So it is very interesting when you said you have been in the you're passionate about mutual fund, and the topic today is how financial instruments will drive the next generation of fintech.
Yes,
So it's a very fortuitous situation. At the same time, today we are in a fortuitous time because today another financial instrument is getting the current very new age financial instrument is getting high. Zomato is going IPO today.
yes.
It's the second day of Zomato's IPO, and I think it has already clocked in sort of
They have received
4
what?
point, yes, they have 4.8 times of the subscriptions and 7.6 times of QIB portions booked. So which is another success in terms of IPO for India, because IPO has been a very stagnant part of Indian businesses. Uh,
Yes, true, very true.
so let's start with mutual fund. We'll get into IPO a bit later. So mutual fund is something which growing up, discussing insurance, understanding mutual funds and the risk of equities, and understanding these instruments, financial instrument, how they can be leveraged by the public to gain more financial wealth or increase their financial wealth. How would you address that reputation that generally associates with any new person who wants to get into mutual fund?
Very true. We, Ankan, I would say like that this is a very unfortunate part for India because
Right.
it started long back in 1963.
Mm-hmm.
So, like 1963 to you can say 2021, and only 3% of the people are well familiar about the mutual funds. So this pains me a lot. And still, the notion the mutual funds are subject to market risk, that is deep inside the people's mind, and people are not coming. But in my last 24 years, I'm very, I would say, I'm very confident. In case you follow certain basic rules about mutual funds, there is virtually
Mm-hmm.
no risk in mutual fund. And
Right.
one of the fantastic tools for,
Mm-hmm.
as you told, for general investor.
Mm-hmm.
So we need to work more. Many new companies are coming, although there are 47 players. Yeah,
Right.
you were saying
So
something.
yeah, yeah. So right. So on that note, I also my question would be: so over the last, I would say 5 to 7 years, there has been huge amount of technological advancement in terms of mutual fund distribution or making people aware of mutual fund for people to
Yes.
buy more mutual funds or become educated on how to use this financial instrument in their life, right? So a lot of new companies have come up to solve this problem. So how do you think technology is driving this acceptance of mutual fund in India?
Uncle, there is no denying about the fact that in case if we remember to 2020, so one of the reason would be the launch or the emergence of Corona. But similarly, in case we see to a positive side, this fintech sector, and if we
Hmm.
take more specific about this financial sector, so
Hmm.
you can see the on March 2020, somehow whenever the market had a huge crash when the
Hmm.
market saw that there will be a corona or covid or pandemic, from it fell to 26,000. The Bombay Sensex was 26,000.
Yes. Yes.
And if we see today, it is something more than 53,000.
Hmm.
So 26 into 2 is 52,000. So in a span of 16 months, the market has grown up like anything. And if we bifurcate the entire thing, or if we go deep, the fintech thing, or the emergence of players like Upstocks, like Zerodha, they had a major contribution in putting putting the stock market in their hand, or I would say putting stock market in their mobile. And putting the stock market in their mobile, the technology is fintech only. Everybody
Yes.
knows
Yes.
that.
Definitely.
So that's a very good thing, because if you go by the demat account which are opening, they are surpassing the number which are maybe 4 to 5 years figures which has been crossed, and it has been growing daily without fail. Market is not stopping.
Hmm.
But I think, but are you left behind? Although this is not our discussion, but what is your portfolio? Are you invested into mutual funds and stock market?
So I'm more into more riskier things. I'm exploring cryptos right now. So we'll come into that
Okay.
financial instrument
Okay.
at the end of the discussion because let's first discuss about the existing financial instruments that has been driving forces. So you've currently noted down one fact that uh, in March 2020 there has been a crash because of the situations that came up, the new normal that came up. Uh, but the recovery has been in very fast in a year, right?
Very far, very
So if we
phenomenal.
compare, yes, exceptional, right? So if we compare this to 2008 crash, right? Even then there was a similar kind of situation that came in, but it took 2 to 3 years
Yes.
for the system to recover, right? So understandably, there the situation is primarily the whole recovery or whole aspect of gaining trust back into the system is being driven by new fintech companies, like as you said, Upstocks, Zerodha. So how do you think that these people are so essentially stock market was always available for people in form of demat accounts,
Right.
right? So how these people have changed things and made it more accessible for a common man to understand stock market? How has
Anka,
technology made this useful?
yeah, got your point. Ankan, I would
Yeah.
like to address this in a different view. Suppose we all are playing a 2020 match. Okay. So we all are looking at suppose the final where India is batting and we are on the 16th over. So we all know that the only 4 hours are left, and entire the winning or the defeat of the entire team depends upon how soon we pick up the run rate and close our
Hmm.
target.
Right.
So I would definitely give a thumbs up to Zerodha and Upstocks because they had their entire infrastructure ready, and nobody knew that the corona would be coming or we would be stuck at home like in this pandemic. But they were like, I don't know, like I'm still in a days of shock. Like how could these people came up with their entire infrastructure and people were sitting at home. The market had crashed. The market took that, yes, this is the worst thing, and it was supported by the easy liquidity. It was, and India, due to the past reforms, the economic stability has given there, and the emergence or the introduction of all these things combined together, the market started moving and people had no work at home. Everybody was maximum people were laid off, and stock market was sort of a lifesaver for them. I have seen like I generally do not trade in stock market before 2020, to be very frank. But 2020 also, yes, I upgraded my knowledge, and yes, I am a very active player in stock market also. So maybe in 1 year you need to adapt thing very fast as per the situation. So combined with all these things, but yes, no doubt about that, the fintech had a major role because the making possible the stock market in your mobile or your laptop was not an easy thing. That was not there in 2008.
Right. So now coming to more deeper understanding of financial instruments, like
Mhm.
so it is not just so in fintech there are regulations associated with it, right? So it's not just technology that drives the development; it's also driven by relaxation in terms of your regulations. So we can see
Yes,
that in the past 4 or 5 years, we have rarely seen an IPO, but from 2000 2021 is being called the India's IPO year, right?
yes,
In the past few past year, we have seen a lot of banks like your Bandhan Bank making an IPO. Today, Zomato is making an IPO. Nika, your Zerodha, all of these
they
are
are in the
set for
pipeline.
IPO,
Yes,
right?
very true.
So it came out with obviously the mixture of technology, fintech has created a situation where people are aware of it, more common people have an access to it. At the same time, there has been a relaxation of norm from SEBI, right? So, how our technology can leverage this and also make the regulatory frameworks aware that these are the things where we need to work together to improve the financial inclusion in this market, improve the access of financial instruments for the common people. So, what do you
Very,
think on that?
yeah, Uncle,
What are your thoughts?
you told it in a right perspective. But I have some different or something different view about this. If you take the past data,
Mhm.
whenever there is a bull market or whenever there is euphoria in the market, all the company want to encash that euphoria. Okay, it's not that Zerodha or this Zomato or Bandhan Bank, they came because they came just because the market was very conducive. They can get a very good valuation about their shares, and they just wanted to encash the entire thing. So, yes, if you see all the past data, whenever there was a bull market, so just before the crash or during the bull market, the entire IPO industry will be alive, and all the companies they will just pull out the money. So, but yes, the structure is different. You can see all the bull markets are driven by the companies which have a different nature. They belong to a different industry. Maybe if you can see some in the past, maybe you will be seeing like IT companies or maybe industrial companies. But this bull market, yes, no denying about the fact that it is being driven about these fintech companies. And forget about this IPOs part. Like in our daily life also, if we bifurcate
Mhm.
or if we give a dissection, each and every part of our life is being somehow touched by these fintech companies.
Right.
So, so like many, very few people know, like this latest Zomato thing. I would say that due to the financial literacy, many people will be seeing that it is coming at the price of something around 70s, right?
73, 75. Yes.
75. But that is not the case. It is actually coming at 700 rupees because the
Okay.
face value is 1 rupee,
Yes,
not the 10
yes.
rupees.
Right.
So, and yeah, so many people will be lured by the fact that no, I'm getting a Zomato share at rupees 70, but entirely
Yeah,
also
it's the
let's,
premium. It's the premium that
it's the
matters.
premium.
Right.
So, although it, you know that it, whatever amount it was asking, he has already got it has got 4 times about the money. But yes,
Mhm.
many few fintech companies are on the line, as you said, Nika, Zerodha, and Aditya Birla Capital Limited. So
Yes.
many, yeah, many few companies are also on the line. So, but yes, I am very. One more thing, like in India, this fintech industry, or you can call all these things are very new. You can put it 2019, 2019 as the year when the
Yes.
RBI came up with the regulations, how to control these things, and even as on date, there is something bloodline because so many companies are participating in order to create a platform.
Mhm.
So the fixing of responsibility is still a blurred area on which RBI is coming, and we need to see like on one hand we will be getting all this what you can call all these opportunities, all these trade-offs. But on the other hand, we need to be very secure, like we are given access to our personal information. A small thing. Suppose, Ankan, I would be asking Ankan, what would be your salary? So you'd be very reluctant to say. But
Mhm.
somehow, just giving a tick on the application, this fintech company will be able to access your entire data, entire financial history. So that is one area in which personally I'm not comfortable.
Right. 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 Those are next to next. So again, coming. So we were discussing about mutual fund as one financial instruments. Now, when we
Mhm.
talk about mutual funds and so traditional financial instruments, so as to say, and how they have been modernized over the time to cater to the audiences. So we have seen that over the time there has been floating rate bonds, zero interest bond, dip discount bonds, and then secure premium notes and such kind of things that has come up, right?
Yes.
So even inverse float bonds or perpetual bonds, these are quite new that has been floated or put forth as financial instruments. But if we see this new fintech organizations or fintech companies who are putting stock market on the hands of people through mobile for them to actually access it, there is still lack of access to this kind of financial instrument like bonds, like different kinds of bonds, different kinds of assets, different kinds of asset management notes, right? So when and how do you think the accessibility of such kind of instruments would be made available to people? Because bonds and all are quite what can I say is are traditionally believed to be secure investments.
True.
So how would you suggest Zerodha or Upstock or companies like who are working in this field to making things accessible for public through technology? What would you advise these people? How would they should they think to bring these things into the common work life?
Yeah, Ankar, you are very right. But if we go deeper under the skin, you will see that now, as the time passes, the success of all the financial instruments depend upon the simplification of the entire thing. Even if you see in 2008, there was something called deep discount bond.
Yes.
Okay, so or maybe floating rate, all this thing. So bifurcating things have changed. The entire arena has changed because as you see like in case if somebody a normal investor like you and me, if we go to the debt part, DEBT,
Hmm.
under which all these FDs, RDs, bonds fall under, the rate of interest is not lucrative. And as we were discussing previously, the financial rate of Indian is hardly 20-21%.
Right.
So we need to see whether are we addressing to this 20% or our focus is that 80%. A
Right.
simple thing. Like I've been into this financial literacy part for last maybe 15 years, and you had given me a very good introduction. But still, we were very instrumental in teaching our armed forces.
Okay.
Like we went to Indian Army, BSF, Indian Coast Guard,
Mhm.
all these people, and we were shocked. Like these are the keepers of our nation, but the financial literacy level is pathetic.
Okay.
So what happened? Like the rising inflation, a thumb rule, which everybody, through all the audience who are listening here, we will be getting something in the range of 5% per annum in case we are putting our hard-earned money into bank FD. And as of day, CPI, the current inflation, is 6.3, which again 90% of the people do not know. So in real sense, you are getting minus 1.3. You are putting 100 rupees, you are getting back something around the rupees 99 rupees. So that is not
Mhm.
the return. That is the depreciation of the returns.
Right.
So where people see like my dream is to buy a Lamborghini, but I have been putting into my money into FD. So ultimately, I will be buying a cycle only. I have to compromise on my dreams also. So that way, this 100% appreciation in 1 year vis-a-vis 5% appreciation in bank FD. So that was the main thing. The people are trying to come to this stock market, and as you told, mutual fund are one of the more refined way to invest into the stock market.
Yes.
So I would definitely say yes. In case you want to take the fruits of the stock market, there is nothing better than the mutual funds.
Right. Right.
And just
So,
to add some more points, like this Zerodha, or if you can go deep into these financial instruments, nowadays,
mm,
if you see this ETF part, the exchange traded
mm,
fund, or you can call index part, or the quant funds, all these things are rising only due to because they have some nature of this fintech thing. They are less complicated, they are simple, they're easy to understand, and they give the fruits and the benefits of equity stock market also. So
right.
simplification of the entire process, simplification of this tech industry, simplification of the financial products will make our future.
Right. Right. So on that thought, so you're correct about that. So simplification obviously will drive understanding literacy, and then people would obviously
Yes.
buy it. But there is a gap because if you see the rise of open banking, how it has grown is basically traditional banks providing their data to third party, that is through an API, and they're building on
Yes.
top of it, right? And making
Right.
things simpler for people to access. Right. So that is something that has been happening with banks. That is something we are seeing that is happening with the insurance industry as well.
Yes.
Right. How do we see that happen with your stock and bond industry or your mutual fund industry?
That will happen. There is no stopping about that. Because to me, I was not very comfortable about, like you can say, old school, the man from the old school. Although I know
Mm.
everything, but what happened? Certain personal experiences gave me a full stop, a screeching halt. What happened? Like I was trying about this budgeting applications because when I advise to my clients, I take them back. I tell them okay, what is the criteria on what is the goal for which you are investing. So the
Mm.
first step would be please create your monthly budget.
Mm.
Please stop the leaking points, which is not possible in case you are not making your budget. And you can see there are some good applications in fintech industry which helps you in budgeting. So I downloaded
Yes,
one of
yes.
the application and I gave the permission, and I was like shocked. Like everything was reflected into that particular thing. In case it is not
Yes.
classified, you have an option to classify into a proper thing. So that gave me a nightmare because I was not very much too much attuned by this technology part, and there was no regulation. In case something happens, like in case you will be seeing today's newspaper, there is a
Mm.
war between US and Russia over this
Yeah, yeah.
hacking thing.
Huh.
There was
The
a
election
major,
hacking. Yes.
exactly, and somehow they disappeared, and nobody knows what was the reason of their disappearance.
Right.
So this technology part, I'm buying mobile. I can buy 1 lakh, I will be buying a 20,000 rupees of mobile, but I will not be comfortable in putting 5,000 rupees of antivirus. So that makes my entire data, my entire personal history, and my entire financial entry into the hands of these cyber crimes. So unless
Right.
until I do not know all these things, the chances are that sometime if my bad days, my financial data or my the entire bank can be swept aside.
Hmm.
So, and if you go by the data, the same psychology, the
Hmm.
emergence, you can see the mutual fund industry, the AUM of the mutual fund industry is something around 34 lakh crore.
Hmm.
So I'm asking you, Ankan, सपोज आई एम सेइंग कि 34 लाख करोड़ रुपए म्यूचुअल फंड में लगते हैं. सो व्हाट इज योर रिएक्शन, व्हाट विल बी योर रिएक्शन? जस्ट टेल मी.
Yeah.
I will be giving you a shocking figure. So I'm just saying,
Right.
so I'm just playing a part. I am a host now and you are the speaker. So I am saying the mutual fund has got 34 lakh crore of AUM. So what will be your one reaction? Tell me.
It's a, like I should put my money in it.
You should be putting your money.
Right.
But 34 lakh crore is equal to 3%. And
Okay.
50% of the people invest into bank FD. And what is
Right.
the psychology you rightly pulled? Safety and security.
Okay.
So
This is a
this
very
again,
interesting insight. Yes.
yes. So even if you see 34 lakh crore is equal to 3%, you can see what is the percentage, what is the quantum of amount the people are putting or they trust on bank FD only due to safety and security, the peace of mind. So as you can say, it will take some more time. We should not be like jumping. We should not be celebrating with joy. It will
Hmm.
take at least a decade or more, so
Hmm.
that the mutual fund industry will at least give a competitive figure to the bank FD. And the basic
Right.
reason about the psychology of the people, not about the technology or the fintech thing. So unless until the
Right.
psychology of the people do not change, we will not be able to see a very good numbers in the reducing FD or the increasing mutual funds.
That is a very, very well said insight. So I'll just frame this in a way that uh,
Yes.
we generally say this. So what we as a younger generation, we feel that okay, you talk about some personal finance app to do your budgeting and all. So I
True.
downloaded a personal finance app, for example, Money Tap or something like that. So
Yes.
now I put it across, I tie it up with bank, and I see that all the data coming in, and then I have to classify them. I have to them put forth and everything. It is pulling all the data out of it. So the
True.
concern becomes for people whether I should be trusting this third party app or not, right? So
Yes.
this is I think this is what is one of the major concern where people are having trepidations, right? And that is where what can I say? Responsibility needs to come from this third-party service providers or third-party technology providers, essentially, where they are saying that okay, we will pull your personal data, we'll show it in a way it makes it more easily consumable for you, but at the same time we need to the customers are like us, we will have to tell them we need you to ensure that our data is not leaked or our data is not misplaced somewhere.
I would be adding one more point.
Okay.
You can continue wherever. Like if you go by the latest Deputy Governor's speech of Reserve Bank of India,
Hmm.
these fintech companies do not fall under the purview of either RBI or SEBI.
Right.
So once something bad happens, we cannot approach to the regulators. That is the worrisome factor.
But this is so again, Manoj. Here I have a question, which is a
Yes.
chicken and egg problem. You can say is that if you put so this is what I've seen. So I've been in startup for a while. So there is a reason why startups don't like regulations, right? It needs a
Right.
sandbox to test itself. It
Yes.
sincerely needs an open sandbox to test itself, right? And in a regulated sandbox, it becomes very difficult to cater or understand how a customer will react. If there is already
100%.
constraint, you cannot put forth that to it. So that is why
100%
you can
agree.
see there is a lot of talk about the sandbox, the financial sandbox of Kenya or financial sandbox of South Africa. South Africa financial sandbox was so open that it led to cyber crimes. At the same time, Kenya South financial sandbox was so well regulated that it is making it one of the hotspot of fintech development. Right. So, how should India adjust itself to create that sandbox for Indian startups or Indian technology companies, even banks who want to enter into the space of open banking, into the space of tech companies, and actually benefit the customers in a proper way? What do you think about
Very
that?
true.
How to
Perfectly.
get there?
Perfectly. Like in fact, you made my entire thing very simplification. Like there are basically two models. Okay, one model is which is being followed by UK and Australia, which is like driven by the market demands, and they will change their entire thing upon the market condition. On the other
Right.
hand, if you go by the US or Japan, they are purely regulated by the government regulations.
Right.
And I'm a big fan of Reserve Bank of India. Like I
Okay.
proudly say, they proved like way back 13 years ago, in 2008, we were in like our dreamland, USA. In 2008, there were 300 banks which disappeared overnight. And in vis-a-vis an underdeveloped or a developing nation called India, whose regulator was RBI, not a single bank failed. Entire credit goes to Reserve Bank of India. So Reserve Bank of India took a very fantastic approach, and they've already adopted a hybrid model. Best of the best of UK and Australia and US and Japan. So there will be, whether you like it or not, because the security concern is the primary thing. And in case the fintech in India need to flourish, they need to develop their entire model, their entire technology and ideas around this hybrid model only. And
Right.
as we had discussed about this 50% of our hard-earned money in bank, so the psychology behind the RBI very well understands all these things. So they will not be changing overnight. Although in 2019, the bill which has been passed, they clearly told that we will be adopting a hybrid model on these fintech things.
Right.
So you will
Right.
be getting best of both the worlds.
Let's see. Let's hope. Let us hope. We are always hoping in terms of regulation. We are always hoping.
Yes, yes.
So, Manoj, I think we have had an interesting talk. We can't keep on talking on this because this
This
topic
is
is a
this
sort
is
of
this is an unending
interesting for
topic.
both of us. Yes. So let us take some questions from the audience.
Surely.
So let's take question of Tathagato. So Tathagato says, "What are the financial instruments into which I can invest to get my return in compounding?"
Okay. Again, I'm a die-hard fan of mutual fund. So either you are a conservative investor who do not want to take the risk, or you are a very aggressive investor, you want to multiply your return, or like RBI, you are a people who is putting one leg on debt and one leg on uh, equity. So the mutual fund gives you a perfect platform. So you should be shunning all the FDs. You should not be putting your hard-earned money into stock market without knowing the detail about thing. And the mutual fund are the perfect vehicle which you can start, where you will be getting a compounded return also. And in case you are a salaried person, the best thing would be systematic investment plan, SIP, what we call. So that is the best
Mhm.
instrument which can fulfill all your dreams.
Right, right. So coming to instruments, when we talk about financial instrument, so financial instruments has been there, and I don't think there will be much change in terms of what kind of financial instruments. So it will always be between debt, equity, and your venture capitals, right, or hedge funds. So these are the few that has come up, and this is the few which will remain. But norms and terms around it will keep on changing, making it a highly discounted bond, or making it a, what can I say, discounted bond, or warranties, option bonds. So the underlying structure remains the same. What the open banking has done essentially is build on top of this to make awareness an accessible right. Right.
Yes.
So how do you think that this open banks should actually approach this market of SIPs, mutual funds, and all this kind of financial instruments other than the standard ones like stock and your venture capitals, and make build and bring them up to the public so that they can start taking care or taking investing in them also.
Ankan, very good question. I would like to take this opportunity to mix both the things. Okay,
Yes.
to for the our audience as well as for you. Basically, let us start. You get 100 rupees as a salary. Okay, so your salary is 100 rupees per month. So what happened in India? Generally, 80 rupees is being spent in all the expenses, be it rent, be it entertainment, be it fooding, everything. So you will be able to save something around 20 rupees. So 20 rupees goes into the four asset classes. One is debt, equity, gold, and real estate. And the fintech industry has done a wonderful job without giving much of a thing. You can very well take the help of this fintech industry and put your money as per your risk appetite, as per your goal, and as per the returns which you are expecting. So let us take, without taking much of a time, like let us take equity. You know very well what about the stock market. So you can very well take the help of this Zerodha, Upstocks, ICICI Direct, all these things. They've got fantastic platform backed by huge research. So you can take them help, you can put their money. So as my pet mutual fund, you can again take the help of these platforms, and you can very well put this money into either equity funds or debt funds. In case you want to take both the worlds, you can put in the balance fund. So
Mm.
either you are investing through mutual funds or stock market. Again, equity is being very much catered by all these things. But if you are very much of debt, again, these fintech platform also give you an opportunity to invest into debt, or you can buy gold also. So, like
Right.
buying a gold, I am just bit of confused about the authenticity of the gold. Where will I keep the gold? So you can buy gold ETF also. A wonderful
Mm.
mixture of fintech, simplification of the product, or if you want to put into real estate, REIT, a very fantastic option. Although it has just started with the help of some of the mutual funds which are coming with the REIT. So with the help of it, you can invest your money into this your real estate also. So you can take any of the asset classes. All the options are there with the help of these fintech companies, which can put your money into the right system.
Right, right. I think even Paytm offers you to help let you
Yes,
invest in
yes,
gold.
very
Right.
much, very much.
Okay. Going to another question. So this is a question which I said that we'll be discussing at the later stage of our discussion. Is that decentralized finance? Okay. So there's a
Mhm.
question from Jeswin. So do you think the decentralized finance eliminates the need to trust centralized parties and make digital services open and democratic? So this is the argument that has been there for our, what I can say, since the development of Bitcoin in 2008, right? So we have been grappling this question for last 10 years. I would love for you to take it up.
Ankan, I would be very disappointing giving you my view because, as I told you, I've
Yeah.
been into this side of the thing. So, but India has already taken an approach. We are not yet regular. Not we, like RBI is not yet regularizing these crypto things.
Hmm.
And in past maybe couple of months, 3 to 4 months, we have seen big scams across the world. The valuation of the scam were something in the million and trillion of dollars. And RBI has taken a very clear stance that no, we are not going to regularize crypto coins in the very near future. And as you told, it has been very proactive. Although the industry started in 2016, the bill was passed in 2019. The 2020 and 21, like they were the absent years in the entire history. So we are very much on the verge of this entire all these things. And RBI is very told that they will not be allowing the free market practices. So we will have to adopt a hybrid model where you need to answer all the regulatories and you will have to register yourself, which should be falling either under RBI or under SEBI, because these are the two regulators which are controlling the financial markets. So coming in the future, or in the future, we will not be seeing a very good growth unless until the companies are very much following these norms, because the security or the primary concern of the people's money is the primary objective of RBI. So innovation can wait, but it will not be happening on the basis of security of the people's money.
Right, right. So before we close our discussion, we have a simple question for you. There are a lot of people here who are listening to this. Would be a budding entrepreneur, would want to take up some new ideas and start their own ventures. So what are your thoughts for people who wants to get into the segment of, say, this finance, creating tech products around financial instruments? So what would be your
That is,
advice for them?
that is the future. And I would be boasting, because since you had given me the platform, so I would like to take this opportunity, because I could see the future. So long back, if you remember, since you are very much into the fintech, there was a company called Pentafor Solic Technology.
Hmm.
So I joined, my entire life saving, I joined Pentafor. I wanted to learn the coding thing, because I knew the future would be the Amazon, the Flipkart, and the Paytms. We created a portal also. At that time, the name was www.rangeen.com. It was
Hmm.
India's the topmost thing, but we were not able to capture the entire thing, and it fell within 1 month. But what happened, like, it doesn't come from inside. Like, if suppose if you want to know, if you want to learn mutual fund, or you want to go to paytech industry, your inside, your genetic structure should support you. But in case that is lying within you, you should be going for fintech, because this is the future. There is no doubt about that.
Okay, great ending note, Manojji. I think this is something which all of the people who are listening here should adhere to. First, obviously, innovate with the idea of putting people's security first, of course. And the second
Yes.
is whoever is thinking of building a fintech solution or a fintech sandbox over uh, to make this financial instrument like bonds and securities more accessible to the general public. You are the future. Thank you,
And
Manojji. For
thank you.
yes, please.
Just you don't have to. This is my message to the entire audience. You don't have to believe Manoj, or don't have to believe Ankan, but just look at inside you. When you are paying your electricity bill, you are using Paytm. You are Whenever you are ordering food, you are using Zomato or Swiggy. In case you want to invest into stock market, you are using one of the stock broking portals. So in our daily life, if we want to buy some household, we are using some app, maybe a big basket or something. So entire life, from in the morning till evening when we sleep, we are being driven by this fintech. So this is the future. So jump on this future. Don't be a consumer. Be a developer. Be a sunrise industry. Make millions and trillions. Share something with us, with Ankan and me, and be rich.
Great. With that note, we'll conclude our discussion. Thank you,
Thank you,
Manojji,
Ankan.
for joining us.
Thank
It
you,
has
Ankan.
been an insightful session.
And thank you for
It's a
inviting me.
pleasure.
Yeah, thank you for inviting me. This was a wonderful session, and you are a wonderful host also. It was a pleasure talking to you also. And thanks to
Thank you,
IndusNet
Manoj.
also. Thanks to IndusNet.
Thank you on behalf of us. Thank you. Thank you.
So
So,
stay healthy,
guys,
stay safe.
yeah, bye bye.
Thank you.